Hello and welcome to Today Tonight. This evening we investigate reports that ABC offices have been using their petty cash funds incorrectly. We will now cross over to our reporter.
Thanks, Nick. A UTS accounting student has the footage and exclusive story.
Thank you, Rachel. Tony's IGA, Plum Real Estate, and now ABC offices around Australia are being caught by audit checks inappropriately using petty cash funds. Purchasing of gifts and fuel for personal vehicles instead of claiming mileage were among our findings. For all the viewers at home, Rachel, I'll explain what petty cash actually is. Petty cash fund is a form of internal control. As you can see, it's money we have on hand for small items of unexpected expenses. The person responsible for the petty cash is known as the petty cash custodian. It's the custodian's role to ensure that the petty cash is physically secured to prevent theft. When the cash in the fund is low, the custodian must also request a check to be cashed in order to replenish the money that has been paid out. Rachel, in comparison to ABC, David Jones is an example of a business who utilises the petty cash fund effectively. We're about to investigate how they keep track of their funds in comparison to ABC, but firstly, let's see what they spend it on. The first step is establishing the fund for all these items. A cheque is written for the amount the fund will be opened for and then cashed and left with the custodian. For example, David Jones cashed a cheque of $400. The entry shows an increase in petty cash and decrease in cash. Step 2 is making payments from the fund. There are two main methods for making payments. First option is that employees can spend their own money and seek reimbursement. The second is that the cash can be taken directly for payments. However, remember all receipts must be kept. And also note, journal entries are only required when establishing and replenishing. Replenishing the fund is the last stage. Once the money has been spent, the business must allocate more money to bring the fund back to its original balance, which in our case for David Jones is $150. To do this, a petty cash report must be made. As you can see here, the amount required to replenish the fund balances with the total receipts. A cheque is then cashed of $50 to replenish the fund through a journal entry. The receipts should equal the amount to replenish. If the balance is less or more than what we should have, we call it the cash short and over account, which can occur due to reasons such as issues with the custodian, lack of receipts, or incorrect change. It is a temporary account and can either have a debit or a credit. For example, cash required to replenish funds may be $150, however total receipts may only be $130, meaning there is a cash short. This $20 is then added to the cash over and short account as an increase to expenses, hence it is debited. If $40 had accidentally been added and there was too much money in the fund, we would credit this amount. There you have it. Thank you so much for all our investigators for helping us on this petty cash case.
Thank you, Rachel, for that story. We will be right back after the break.